Welcome back to my money list and welcome to Sunday night's video. And be sure to tune in every Sunday night because Sunday night's video sets up the trades for the following week. And make sure you tune in after the Super Bowl on Sunday. And if you would have watched last Sunday night's video, you would have cashed out on puts like I did, at about a 30% profit average. So with that profit, we are going to discuss what did I buy heavy on Friday and what puts do I have left, because I only have one put left. And this put is a golden opportunity, which I will add more if the stock continues to move higher. And then we're going to discuss what stocks did I buy on Friday, because I started nibbling with shares because some stocks got slammed and I think they are approaching a bottom. And then at the end of the video, we are going to look at my largest position. And I added to that position on Friday because it got absolutely slammed. And not only did I double down on the shares, but I placed another call option. And I am fully loaded on this stock. And as always, nothing on this channel is financial advice. I'm just showing you what I'm doing and what's on my money list. Okay, so we have so many things to talk about in this video, I don't even know where to begin. So let's begin with the Nasdaq selling off 1% on Thursday and then 1% on Friday, making it a 2% total, which is pretty much a nothing burger, right? Because the Trump tariff liberation day sold the Nasdaq off at 20%. So a 2% move is nothing. But stocks got slammed. Which stocks? The metals and mining stocks, the AI bubble stocks that I discussed and mentioned in my videos, some of the space stocks, the eVTOL stocks, and the list goes on and on. And you would think that the Nasdaq was down 5 or 6 or 7% over the course of those 2 days because these stocks got slammed so hard, and silver got slammed, gold got slammed. Bitcoin is now at 78K as I filmed this video on Saturday night, and the Nasdaq is only down 2%? Are you kidding me? What happens if the Nasdaq is down 7 to 12%? And so, in my opinion, I think stocks will be up tomorrow on Monday because we had the 2-day sell-off and we haven't had a 2-day sell-off since Liberation Day. And because some of the stocks got slammed so bad, where is the money going? In my opinion, it's going back into stocks tomorrow morning because we never saw a 3-day sell-off since Liberation Day. So it's been bull market, bull market, bull market, 1 or 2% dip, bull market, bull market, bull market, 1 or 2% dip. So with that said, that's why on Friday I started nibbling with share buying for some stocks that I thought were approaching their bottom. And if they sell off more, then I will double down. But I am still cautious. That's why I still have one put left, which I think is a golden opportunity. So let's now look at that put because that is my only hedge money at the moment in case the stock market dips this week. So this is the only put I have left on ASTS Space Mobile, and I will cash out of this before they report earnings. Okay, so before we look at the chart, AST Space Mobile's competitors are SpaceX with Starlink, Globalstar, Iridium Communications, Link Global, EchoStar, and Viasat. SpaceX is supposed to launch this year in 2026 with its direct-to-mobile services, which is what AST Space Mobile is doing. And keep in mind that Iridium Communications is owned by Cathie Wood and her firm, and their valuation is excellent. Cathie Wood does not have ASTS, and so I already made my case that they're overvalued because they have a 2,000 price to sales because they posted 14 million last quarter. However, they're supposed to post 40 million this quarter, which is on March 27th. And then next quarter, they're supposed to post less. So from here to here, I will place another put. But for now, I expect the stock to sell off from this week until earnings. So their earnings are March 27th. My put is at 120 and the stock is at 111 right now. So I am 23% profitable on this trade, but I think it comes in lower to $95 before earnings. And why do I say that? Because all of this here, people need to cash out on. There needs to be profit taking here. And from the current price of 111, a 10% drawdown barely brings it to 100, and about a 15% drawdown brings it to around 95. And this is a modest drawdown in my opinion. It could even go lower to 80 or 85, but for sure it's coming down to 95. And we'll see how low it goes, and then I will place a call option because I think after earnings it's going to shoot back up. And then depending on how high it goes, it'll be another rinse and repeat because I will place another put option. Because when SpaceX and Starlink announce their system, this is surely going to drop, or any other competitors. So I think the 120 put that I have is a golden opportunity for the next 6 weeks. And if it breaks its high, I will place another one. And I'm not going to sit around and wait. As soon as it hits 95, I'm out of this trade because it is a meme stock. It is highly traded. And I'm not going to sit around and be greedy because it can shoot right back up. And there is one thing that keeps ringing in my mind, and it's the statement from Tom Lee. And I just heard it from his most recent post on his Fund Strat YouTube channel. So I'm not going to play the clip because you can hear it on your own. We don't have time for that. But the message that he keeps saying is that he expects a 20% dip from a policy shift. What does that mean? Make a comment. Let's talk about it. In my opinion, he keeps referring to the Trump tariffs, policy change, and he keeps referring to the 20% dip from the liberation tariffs. Or does the policy change mean something to do with the midterms? I don't know, but I am expecting this to happen. That's why I will always have a hedge. So throughout this video, as I discuss all of these trades, keep in mind that I am thinking about Tom Lee's statement because I want to be ready when that 20% dip happens, or let's say a 10% dip. So any trades that I placed on Friday, which we're going to look at right now, I will quickly cash out of if I see a 20, 30, or 40% profit. So I have the Tom Lee statement in my left hand, and then in my right hand, we have the tax rebates that are coming, and everyone's saying this is gonna pump up spending, pump up the stock market. And then we have the new Fed chair who's coming in around May, so June should be a rate cut. These are the two catalysts that I see coming. So when you couple that with Tom Lee's statement combined with Trump's tariffs in there, because Trump can announce a tariff at any day, we don't know when the sell-off is coming. So we got a bull market in my right hand, which has been a bull market for 3 years, but we can have a sudden dip. So what do you think? When is a sell-off coming and for what reason? And what does the policy change mean? The next thing we have this week coming is Palantir's earnings, AMD's earnings, and Amazon's earnings. So here's my opinion in a nutshell. I don't care about Palantir because I think the upside is only 15-20% if there is an upside. And if they report 1% less growth, I think the stock will sell off. So if Palantir runs higher, I'm going to place a hedge, which is the ETF PLTZ, and I will let you know about that. AMD, I don't see it breaking its high of around 275 because that M3 chip is not going to sell yet, and the M400 chip is not selling yet either. I believe they haven't even started production. But I do have shares of AMD. I don't have any calls yet. If it dips lower, I will buy a call and place it out 2 years because I think that M400 chip is going to start to show that 35% revenue growth. So the main one that I'm looking at is Amazon. If any of my stocks run that I bet on Friday, I will cash out and I will place a call on Amazon. I think Amazon is breaking 250 after earnings. Why? Because it did the same thing last earnings. Why? Because they have 20% plus revenue growth for their AWS services, not to mention all their other services. So I'm going to place a big call on Amazon this week. So I'm praying that it dips 2 or 3%, and it will probably be the 250 call. And I will update you on that one in my midweek video. Okay, so now let's look at the stocks that I started nibbling on with shares on Friday after the 2-day sell-off. And all of these stocks I think are an easy 10 to 30% profit by the end of the year, if not sooner. And no, none of them are the metals and mining and rare earth stocks, because I think those still have to come in a little bit lower. And then we're going to discuss my largest position in my portfolio. Okay, so the first stock I started nibbling on with shares is Clover Health. And this is a hedge against the AI trade because it is a healthcare stock in its own sector that is growing. And this is a meme stock, so it can easily be up 10 to 30% in one day. And we see here that the earnings per share are not that negative, and their market cap is 1.2 billion. And with a market cap of 1.2 billion, their price to sales is 0.6. This is very low. I like this number a lot. And on the balance sheet, they have 0 debt, and their equity is almost double their liabilities. So the balance sheet is good, and we see that they're pumping revenue every quarter, almost 500 million here, 478, 462, 337, 331. All of this combined with 5 quarters is about 2.2 billion, and their market cap is only 1 billion. So what is the problem then? The problem is their operating expenses are a little bit greater than their revenue. So they're barely negative 24 million. I expect this to change over the next 4 quarters, and I expect this diluted negative EPS to come in better. So this is the 6-month chart of Clover, and it is at a year low, which is at 225. I do not see it going lower than 215 because of their good financials. So I only see upside with the stock. And we see here, every time it hits 225, it bounces back up to about 275, which is about a 25% move. So I expect this to bounce back up to at least 285 over the next 3 to 6 months. And this can happen in a week because this stock is so volatile and it has the meme retail trade attached to it. So this 25% can happen easily. And then when we look at its high, which was just in October, it was 380. So from 285 to 380 is a 40% move. And I don't see why it wouldn't reach its high, because their financials are good. And all they have to do is beat that earnings per share by a fraction of a penny. So I think this is a no-brainer, holding shares and waiting till it gets back to about 380. And this will happen, in my opinion, over the next 18 months. So 40% plus 25% is about 65%. And so I'm looking at the $2 call. I do not like the 250 call as much as I like the 2. And I like the January 15th, 27 expiration date. So if it drops below 2, I am pulling the trigger on this call big time. And if the stock drops to 215, I may pull the trigger on this 250 because I don't think it goes below 2. But for now, I have shares. The next stock I started nibbling with shares is Big Bear AI, and they're in technology and they're in software. I don't know why it doesn't say software here. And they do AI software like Palantir for defense companies. So this stock reminds me of Palantir in its early stages, and their market cap is 2.2 billion. They're negative $1.57. Their price to sales is 15. This is not a crazy high number. For example, the AI data centers, they are all trading at around a 40 times sales. But for a software company, this is good in my opinion, because software has a lot of margins, and we see that they're posting 33 million, 32 million, 34, 43, and 41. This is about 200 million for the past 5 quarters. And I expect this quarter to come in at 40 million because of all the deals that they did. Now their operating costs are higher, so that is a problem. But this is only a trade for the next 3 to 12 months because this stock is very hot right now. So just a couple recent news. In addition to the Army deal, BBAI secures this deal with AdPorts Group. Then we see here a couple days before, they secured another deal with Abu Dhabi. And so with these contracts that are being announced every day, and Palantir did the same thing, we also see here that they reported 33 million. The estimate last quarter was 31 million, so they were up 4% on that. And their earnings per share increased by 113%. So I don't see why this does not improve over this quarter, the next quarter, or the next quarter. It could be good news after good news after good news. That's my point. But just on a chart fundamental trade, it's a no-brainer because we're trading at a 6-month low here. And I don't think it goes lower than this 475, which is here. I don't even think it goes lower than 5 in my opinion. So I'm looking at the $5 call and the $5.50 call because from $5, which is here, back to 7 is a 40% move. And for sure, it gets back to 7 by the end of the year. And I would choose the January 20th, 2027 expiration date. And with shares, this is easily 40%. So does it get back to $9? Absolutely. If every quarter beats by a fraction of a penny, this will get back to 9 within 12 to 18 months guaranteed. But it can happen sooner because this is a meme stock, highly traded. Tons of call option alerts on this stock. And they're calling it the next Palantir. So 40% plus 30% over the next 18 months is a no-brainer in my opinion. With shares. Of course, calls are riskier, but I am willing to take that risk. And remember, nobody was buying Palantir at $5 a share. So if this is the next Palantir, or let's say Palantir's son or daughter, it will for sure get back to 9, and we will see it quarter after quarter. And it's gonna blow way past 9, just like we saw with Palantir. Okay, so now comes the main event. The stock that I added a call to on Friday, and I doubled down on shares, and I have 5 existing calls on this stock, which goes against all investing rules, because you shouldn't have more calls than you have shares. But that's how bullish I am on this one. So what is the stock? HIMS, baby. HIMS. And before we look at the financials and all of my trades, why am I so bullish on HIMS? Number 1, the Super Bowl is coming next Sunday, and the Super Bowl commercial is going to be narrated by Common, which is that rapper. And it's going to be controversial because it's critiquing the American healthcare system and that there's a wealth gap and blah, blah, blah. And I'm hoping it's super controversial because the same thing happened last Super Bowl with the HIMS commercial. And what happened? The stock popped the entire week. Number 2, HIMS is reporting earnings. They are reporting earnings 2 weeks after the Super Bowl. So now let's look at a few things that I expect with the earnings, and let's look at the chart, and let's look at my trades. Okay, so HIMS is in the healthcare sector. So it's a hedge against inflation, it's a hedge against tariffs, it's a hedge against the AI trade, and all of their products are increasing, and they're adding to their products. The market cap is 6 billion. The price to sales is 2.79. That is excellent. And one of the catalysts for this earnings coming up is this deal that they did with Zava, which is a European digital health platform targeting over 1 million customers in the European market, in Germany, France, and Ireland. So these numbers are going to start rolling in this quarter, next quarter, and the following quarter. Another product that HIMS added, which will show up this quarter, is the menopause and premenopause for women. This is super hot right now for women. Everyone's doing this, Weight Watchers, etc., etc. So this is another product on top of all their products. And I think this is a big one. And when you combine that with a 21% increase year over year growth with their subscribers, subscribers, making their total subscribers 2.47 million. Revenue growth 600 million, a 49% increase year over year, and their subscribers are spending more money. It rose 19% to an average of $80. So their customers are buying more, and they're adding more products, and they're adding more subscribers. Overall, this can be a 25 to 30% grower year over year. And if they hit 35 or 40%, it will be the darling of Wall Street. And so when we look at the 1-year chart of HIMS, we see that it's trading at a 1-year low, which is around $27. And I don't think it goes down to 25, which is the official low. So between 27 and 30 is a huge buying opportunity because it's just a matter of time until it gets back to $46, which is where it was at in October. And we see that in July, it was at $66. So from its current level to 66 is 140%. And all they have is this negative EPS problem, which came in 36% lower. That's why the stock got slammed last quarter. But they do not have a revenue growth problem because they're growing 3 to 5% every quarter, making it 20 to 25% year over year. I expect this quarter to be 5 to 10% growth, and I'm hoping that this EPS improves. But eventually it will improve. So I think with shares, it gets back to $66 in 18 months or sooner, and 46 by the end of the year. And of course, calls are more riskier than shares. So these are my calls, and I have shares. The only two calls that I'm worried about is the 45 and the 47, because the 47 expires in March. So this one I might lose 20% on, but the 27 will make up for it. And if the 45 call loses money, the 32 will make up for it, the 35 and the 37, because I think HIMS will be trading above 45 a share by the end of the year. So these three are my money makers. This 47 was very risky. Of course, I should have never placed it. And of course, I should have never placed the 45. But that's why I have the 27 as a hedge. So if it goes lower to, let's say, 25, I buy a 25 call or I add to this 27 this week because I want to get fully loaded on this 27 or the shares this week. And should I have more calls than shares? No, I shouldn't. And I am learning how to be more disciplined as I continue to trade. But yes, I got trigger happy with this 47 call, but I don't see any risk with shares in HIMS over the next 18 months, period. So what do you think about my trades? What did I miss? Comment down below. Let's get the conversation started. Don't forget to check out my 2 other channels. One of them is a Bible preacher where I preach the Bible. The other is a homeless helper channel where I go around walking in Los Angeles feeding homeless people. And just a reminder, for any like that you click for any of my videos helps a homeless person, because my goal is to monetize all of my channels and help more homeless people. So thank you for clicking a like. And the links to those channels are in this channel's bio. Thank you for watching and see you in a couple days in the midweek video.